Question 5 there says Trends Limited is proposing a rights offering. Presently, there are about 350 shares outstanding at a 100 kwacha each. There will be 50,000 new shares offered at 90 kwacha. What is the new market value of the company? If you remember, earlier on in the first part of the video, we were talking about market value at some point. How to get that market value. You should get to the part 1 of the video. So market value, we use the same approach we used, how to get market value, and given this information, of course. So what have you been given? 350 outstanding. So you have your outstanding shares, which is as good as the odd. What is that price on the outstanding? 100 kwacha. How did we say you identify the odd market price? The price on the outstanding. In this case, it's 100. New shares they've given, at least directly they're there, 50,000. Then at 90 kwacha each. New shares, basically, the price on the new shares is what? It's the subscription price. That's how you get to know these things. The price on new shares is your subscription. So now you move on from there and answer the question. What is the new market value of the company? Let me now share a screen and answer this. And let's take note that, okay, when I just share the next screen, I'll answer part 1, part 2 as well. As you can see them on the screen. Part 2 is how many rights are required to buy one new share. So I'll answer both on the next screen. So let's start with the first one first. So initially, if you remember part 1, we said market value of a firm, it's equal to the company, it's equal to the odd price. The odd price is the price on the outstanding. I mentioned this, times outstanding shares. Remember this formula. That's how you get market value. Outstanding, I'll just abbreviate again. Sorry, not over. Plus sub price. Let's just rewrite that well. Subscription price times new shares. Okay, so you have that formula. It's just a matter of substituting, then that's it. So odd price 100, outstanding 350. Multiplication of these two gives you what? 35 million. Okay, plus subscription 90. We said the price on new shares is a subscription price. This is times, sorry. 90 times new shares, how many are they? 50,000. Answer 4,500,000. The addition of these two gives you the market value which they are asking you, which is giving you 39,500,000. That's how you answer part 1. How do you get the next part 2? Part 2, value of a rights. It's number. They ask for number of rights. Rewind in the video. Part 2 asks for number of rights. How do you get number of rights? Odd shares over new shares. So how many odd shares are there? Odd shares is what? It's as good as outstanding. Just know these terminologies that they use. So they're about 350. So they told us. New, they've stated 50,000. The division of that will give you the number of rights needed to obtain one new share. That's what they asked. So the number of rights needed to obtain one new share is equal to 7. 7, you're doing add rights at the end of that number, okay? 7 rights. That's all. Part 2, you're done. Part 3 and 4 equally, I'll do the same thing. I'll answer them again on the next screen. What is the X rights price? We talked about this, previous part of the video. What is the X rights price? So these formulas, they come around and they just rephrase these things in different fashions. It's just about you getting to know those formulas. And then they further ask, what is the value of the rights? It has come back again as the way we answered in part 4. So let's just do it. Part 3 and 4 we answer. We'll start with the X rights price part. So X rights, we said it's as good as that formula for new market price. Remember, these words are used interchangeably. The market value of this company over what? Total shares. So market value, we just got it, 39,500,000. Total shares, what do we mean by total shares? It's going to be, okay, it's going to be 3, the odd, sorry, plus new. Old shares plus new. That's what they mean by total shares. Division is of this thing to that, right? Answer, when you divide, we are looking for the what? X rights price. Answer, 98.75 kwacha. That's the answer for the X rights. That's all. Part 4. Value of a right. What is value of a right? We said there are 3 formulas. For the sake of the time again, we'll just focus on one of those 3 that were mentioned in the first part of the video, which is odd price minus X rights. Take note of these formulas. I'm just using the first one, which was stated on one of those formulas for value of a right. Odd is what? 100, the odd price. X rights, 98.75. Answer, 1.25. So even in those other formulas where you are seeing that odd minus subscription over number of rights, that number of rights which is in that formula as well for getting the value of a right, it's those ones we've just found in this question where they asked us the number of rights that are needed for what. That's the one you would have to come and substitute this 7 that we got as the number of rights if you're using the other formula to get the value. But for now, we're focusing on just this one, if anything. Okay, that's question 5. Let's answer 6 as well. Question 6 says ABC company had total assets of 700,000 kwacha. That was the worth of their assets last year. Its income statement as the end of the last year is shown below. Earnings rate is at 10% of total assets. So basically what they mean by that earnings rate is that one they would call your earnings before interests and tax. That's what they're talking about. The earnings are at 10% of that total assets. And we know the total assets are 7 million. So 10% of that gives you 700,000. That's the one you're seeing as your EBIT. They call it EBIT. Earnings before interest and tax. So basically what they're just showing you there is what they're calling an income statement or a capital structure. That's it. So you have your EBIT, interests, whatnot. They've given you a capital structure. In short, EPS, that's earnings per share. When you see EPS, when you see that EAIT, it's earnings after interest and tax, which can also be called net income. Know these terminologies as well. That can be called net income. It will be much clearer when we start that topic, capital structures, under this tutorial for Zika. So they just said, okay, the company plans to raise additional 2.5 million, right, through a rights offering. The additional funds will continue to earn 10%. The price per earning ratio is assumed to remain at 7.5 times. The dividend payout will continue to be 50% and 40% tax rate will remain in effect. They ask, assuming a subscription price of 50, how many additional shares will have to be sold? How many additional shares will have to be sold? When they say that, what does that mean? Additional. They already have something, but they want to say what? Additional. This should just bring to your mind new. They want the number of new shares. So the formula we also used in part 1 of the video is the one we're coming to work with here. That formula for which has the subject of the formula as new shares. So I'll write it again for you to refresh your minds. So when we said earlier on in part 1, we're like, okay, new shares is equal to funds needed. So your funds that are needed, okay, over what? Funds needed over your subscription price. This is the formula we started with, the first part of the video. Subscription price. We're looking for the additional shares, which we just said are the new shares. Funds needed, they stated they need an addition of 2.5. Read that statement that came below that particular income statement that they showed, right? There was that part. The funds that they need is 2.5 million. Subscription price has been given as 50. So you just do this 2.5, just rewrite this. This is 2,000. This is 2,500,000 over 50 kwacha. As the sub price, answer 50,000. New shares, you found them. You just put shares. So part 2, okay, I won't share the next screen for the question. I'll just go to part 2. If you rewind the video, part 2 says that find the number, is it the number of rights that you need, the number of rights needed to buy, of course, a share. How do we get number of rights? The video either stated in previously, if you rewind, it's always the odd shares over new. So do we have odd shares? Well, the question has been rather silent on that one. If you rewind to look at the question and pause on the question, there is no clear figure as the outstanding. So we'll have to calculate it. Okay, so in a scenario where you have a capital, what is an income statement, and the shares are not being given like the shares that the company has been using as of that statement that they've produced, the best way would be to use that formula for earnings per share, because at least new we know, right? New shares we know, at least we know that component. Now odd, the odd ones will be gotten from that statement they've given us. Some figure there will guide us in how we'll get this odd share, and I'm about to explain. We use the earnings per share part. That is the only way that will guide us to get those odd shares that are missing in this formula, to get those, of course, the number of rights that are needed. So earnings per share is what? Net income. What's the other name for net income? I said it means this: earnings after interest and tax over number of shares. You've seen why this formula is the best, because it has that component of number of shares in it, and that's what we're even looking for, the number of shares that they've been using, the odd ones, if anything. That's what we're looking for. So EPS, let's get the question and get to identify all these things. So look at the structure there. This is the income statement, or what we would call a capital structure. They've given the EPS, right? 7.14. Net income, or the earnings after interest and taxes, 357,000. Let's go and substitute. So we have the net income, which they are calling EAIT, over number of shares, which are looking for X. EPS 7.14. It's just a matter of changing the subject, and therefore your X, which is the number of shares, gives you 50 as well. You found the shares, those odd shares, because why we found them using this structure is that this is an already existing structure. That's what the company already has as of that day, the outstanding balances. So that's why we had to use that way to get the odd shares. Okay, from there now we have the odd shares. The new shares are already being calculated separately. Okay, and we can now find the value of the number of rights needed, because it's just odd over new. Odd shares over new. Odd shares, we found them as 50,000. Apparently we had a tie. It's not always the same, please. It just happened. So the answer is 1 right. So that's it for part 2. Let's go to part 3. We check. What will be the new earnings per share? How do we get this? Well, look at the structure up there. This is what they call a capital structure, as we said. Okay, although they called it the income statement. Yes. So this is currently the old stuff that the company has, like currently there. Now they want to calculate the what? The new EPS. The new EPS that they're talking about will come, of course, after incorporating what? These additional funds that they're talking about here that they want to raise of 2.5. Meaning, if the company had a total value of its assets as 7 million, right? Once these funds are added, what do you think it will still be at 7 million? Of course not, because more additional funds, of course, are added on. You would add on. So first of all, we would have to redo this capital structure you're seeing here, because it is from a capital structure that you will calculate what? Earnings per share. It's a procedure. Yeah. So the only thing is that we would only have to now change that those total assets were at 7 million at some point. Now they are adding 2.5, giving us a new total value of assets as 9.5. Okay. Then the only thing they just told us, okay, in the further details was that, okay, even after the addition of funds, okay, they will continue earning 10%. That earning they're talking about is just your earnings before interest and tax. So they're talking about the EBIT. So they're saying, okay, even after these additional funds are added on, they will still be getting 10% as that EBIT. So, and we know that every capital structure, as you can see, starts with EBIT. So we'll create a structure again. okay, with now a new EBIT because we've added new funds. And then I'll show you how we'll bring down this. Otherwise, it's very straightforward. Don't worry much. It's just that procedure. So, as I earlier stated, this is a video. You're at an advantage. You can rewind as many times as possible and even watch at your free time. So, we are getting that EP, the new EPS, and I'm about to demonstrate what we'll be doing. So, okay, they've just told us tax because we know tax will be needed. Okay, tax is 40. We just like take note of those important details as we go to the EPS. So we'll start our structure, EBIT. As we said, it always starts with EBIT. So initially we had, is it 7,000? I already said that, 7 million. We are adding new funds of about 2.5, total 9.5. So they said they'll keep on earning what? 10% even after the additional funds, of course. 10% on these additional funds. So 10% of this gives you what? That's what will be your EBIT. 950,000, right? That's what you record as your EBIT. So let me just rewrite that. EBIT is your 950,000. Interests, by the way, interest is fixed. What type of financing did we state in the beginning? We are looking at common stock. I hope I stated this in the beginning. This is common stock, basically, as a long-term source of fund. So under common stock, interest is fixed. It doesn't change. Just take note of that. So interest there is interest is subtracted from EBIT. I'm just doing a structure because in order to get EPS you have to do this. It's a procedure. That's what I said earlier on. 845,000 tax 40%, right? So they said, where do you charge this 40%? Tax is charged on EBT. Always tax is charged on EBT. 40% of EBT, which is the 845, I'm getting 338. Okay, difference net income, right? I'm getting 507,000 here as my net income, or what other books or what they called it there as EAIT. Yeah, done. You found net income. Net income is a key component to earnings per share, as we earlier stated. Earnings per share are equal to what? So earnings per share are equal to your net income over number of shares. Net income is what? 507. We just found it. Number of shares? Well, we've added additional funds, right? What number of shares will you put here? Remember, okay, initially the company had 50,000, the one we calculated already as the old shares initially. Now they've added new funds. Don't you think we should also include the new shares? So, well, it's obviously we have to do that as well because we have incorporated the new funds as well calculating this structure. So even the new shares have to be entitled to be added here in this particular calculation. Because under common stock financing, one thing you should even notice is that whenever there is any additional funds needed, even the shares will be increasing. That's just something to know. Okay. When you divide that, what do you get as your EPS? I'm getting 5.07 kwacha. That's my EPS. That's your new EPS. That's all. You're done. Next question says what? What will be the value of one right? Value of a right. That question has come back again. Basically the same formulas that we know, right? What will be the value of a right? Okay, so let me just, sorry, I've skipped one. What will be the new market price per share? That's the part I forgot, sorry. What will be the new market price per share? We know new market price as we talked about it. So new market price, the way we talked about it, market value of a firm or the company over your what? Total shares, okay? Total shares. So what is the market value? Market value of the firm is the same way we said odd times outstanding. We've been now mentioning this more times in this video, so I'll just go direct. Odd shares. How do you find the odd shares? The question has stated them. Let me go and show you. So I said I want to show you the odd market price because we need it in that formula. That price that was stated just below that structure. Market price per share is 53. That's the one. 53.55. So the odd market price just basically from that same given information, you know, what has already been existing or outstanding. That's the price there. So we said odd market price 53.55 times odd shares. We're getting market value. We've talked about this a lot in the video, so it's just a matter of rewinding. Times, plus the addition of then to be subscription 50 times new shares. How much? Add on the totals and then add together. The first total should be what? 2677,500. Okay, if I'm not mistaken there. Then we're adding it with the summation there as well, which is 25. Answer 517775. Let me write that. 5177. Okay, about 517775. Let me just recalculate that quickly. So I'm supposed to eliminate 17. It's supposed to be like this: 5,177,500. That's the answer, the market value first. Then we know that when you're getting that new market price, we have to divide by total shares. What's the total shares? Odd plus new. Apparently we just said it was just a scenario when they just occurred that they were the same. Answer 51.7. okay, 75 if you want kwacha. That's all. Then the question that just came after that was asking for value of a right. We've discussed this one as well. Value of a right: odd price minus x rates. Odd price minus x rates. That's the one which I've found easier myself, and that's the one I've adopted. Odd price minus x rates. It's very straightforward. In fact, this one giving you what? Odd price was just 53.55. X rates is basically the one we found. We only said it's as good as other names like the new market price 5775. Answer 1.77. okay, 5 somewhere there. That should be the value. Yeah, somewhere there. So there's one last part of the equation, the furthest one. Is it the last part of overseas of part 6? I will respond on that one, but for now this is what we are equally covered with the other group A. Okay, so the very last part I said I'll get back to the whole entire Zika group, but for now this is what we did in this tutorial.